A very calm Paul Theron joins me in studio. How are you feeling? What are clients telling you? Markets are down 3%. The DAX is down 5%. What is going on?
You know, I am in my day job an actual asset manager. So I have R1 billion worth of other people's money that I'm directly responsible for. Days like this are like water off a duck's back because, you know, you don't get the superior returns from equities as an asset class if you're too much of a baby to be, you know, just wafting through days like today. So I'm as cheerful as ever.
Were you sorely disappointed with Operation Twist? Was it not a big enough twist for you, or do you think that it's going to twist us in the right direction?
Well, like I said yesterday, I'm generally not very excited by central bankers. So I was unexcited by Giokos. I was equally unexcited by Ben Bernanke's actions. I was in fact watching Spanish soccer while it was on, and every now and then I'd check on Twitter to see if anything exciting was happening. So obviously the market took a big dive in New York yesterday, but I mean, people there even were saying that it wasn't due to that, it was due to the European situation. But I mean, you know, the European situation we've discussed 300 times in the last 300 times I've been on this show of yours, and every time I say I don't think Europe is going to end badly, it's going to be fine. But you know, investors don't want to hear that. They want to rather sell and wait and see what happens in Europe. I mean, I'm listening to, you know, the Greek finance minister, Stavros Lambrinidis, sounds fantastic, like they've got the situation under control. All of the European officials are happy that they've got the situation under control, but investors, whoever they are, want to shoot first and think later.
Well, actually, the finance minister is Vangelos Venizelos.
I must be talking then about, like, who is Lambrinidis?
Then again, I don't expect you to remember all the Greek names.
Lambrinidis was being interviewed by Larry Kudlow. I don't know, he must be like the economy minister or something. But I mean, he was legendary. He said it's all under control.
Absolutely. When a pension fund cuts of 20%, more property tax increases. So I'm sure they've got it under control.
The alternative to staying in the euro must be a lot worse. Otherwise, they would have left already.
Absolutely. Okay, so I'm focusing on the US. I mean, we mentioned Ben Bernanke was a big focus yesterday, but Obama is also in focus, and things could be changing rapidly for him.
I must say, for me, it's fascinating to try to understand why the dollar has rallied so much. I mean, we know that the rand has totally tumbled in line with other emerging market currencies.
It's a safe haven play, repatriation.
Well, you know, you wouldn't say that the current landscape in the United States is really one which would lead you to think that things were hunky-dory and that it was deserving of its safe haven status. The only thing perhaps one can take away is that Barack Obama seems to have abandoned the middle ground. He's now coming in with much more aggressive tax hike suggestions. And the normal process of US politics is that it's a negotiation. So I think maybe the market is now kind of coming around to the view that the US is in fact going to start dealing with its fiscal issues, and that accordingly, you know, there's a different outlook for bonds. But I mean, I'm totally amazed that people want to go and buy US Treasuries at, you know, 1.5% or whatever they're trading at, when you can get more than that from all of the securities in the S&P 500. It's totally laughable.
Okay, and Paul, maybe you can explain this, because we saw this happening in 2008, where we saw massive liquidation in asset classes across the board. We even saw it in gold, and this is why gold didn't perform well despite the risk aversion. There's a thinking that you liquidate positions to cover losses elsewhere. Could this be occurring at this point? Does that make sense why the dollar could be strengthening to this extent?
You know, it's interesting, because on my show I showed a chart which we can haul out here sometime, which shows that the total value of traded financial instruments in the world is over $200 trillion, of which equity markets is only about 50. The others are like, you know, government sovereign bonds and bank debts outstanding and corporate bonds issued, like the BMW one we were talking about earlier, and so on and so forth. So at times like these, there's definitely a lot of sloshing that goes on. People, you know, realigning. But the big macro trend over the last couple of years has been more money moving into income generative assets and out of risk assets. But, you know, it kind of comes and goes. So the market has done quite a lot of recovering, but people are obviously feeling jittery at the moment. Again, you know, all you can do as an investor is decide where you want to be on that spectrum. For me anyway, the logical thing is to be buying equities on days like this. We were buying stocks today, but you know, I don't hold it against people. We were buying the big three, our big three. We were buying Billiton, MTN and Richemont. I mean, it's
and
like
Richmond was actually at the bottom of the top 40 today. Paul, also very quickly, MPC rate decision today. You said it was unexciting, but it is important. Rand hedges, is that your play going? Are you going to start moving
One of my Twitter
stocks?
friends, Chris Becker, was saying, why, if the Fed can get out their statement in 450 words, why does Jill Marcus have to put like 2,500 words out in her speech, which takes like half an hour? It's ridiculous. Just say things are uncertain. We are not changing rates. Any questions? That's the way she should be going.
Paul Theron, thank you very much for joining.